something.
What is it?
My father recently got into a trade association, but I don't know what exactly is that. Do you guys know?
Oh, I just saw this on YouTube the other day about trade association. Let's watch it. Hi, if you click on this video, you might be wondering what exactly is trade association. So according to section 53, subsection 3 of Income Tax Act, trade association are any association of person, of partnership or of person and partnership formed with the main object of safeguarding or promoting the business of its members. And for the purpose of income tax, a trade association is deemed to be a body of a person instead of a partnership.
Next is the conditions under trade association. So according to tax treatment, an organization will be recognized as a trade association if it fulfills the following two conditions. The first one is that all of the members must carry on a business. And the second one is the objective of the organization is to safeguard or promote the business of all its members. Then if the membership of the business is open to others who are not part of the business, then the organization would not be deemed as a trade association. A trade association must be for members who have a business income. However, since the year assessment 2009, professional bodies is also to be treated as a trade association. Here we have several examples of trade association in Malaysia. So first one is the Federation of Malaysia Manufacturers, which is FMM. It is mainly in manufacturing and industrial sector. And the second one is the Air Freight Forwarders Association of Malaysia, which is the AFAM. And then the third example is the Malaysian International Chamber of Commerce and Industry, which is the MICCI. And this MICCI acts as a key platform for promoting international and domestic trade and investment.
So next, we'll be moving on to the resident status. So according to Section 8, Subsection 1, Subsection C of the Income Tax Act 1967, the resident status is determined by where the management and control of its affairs or business is exercised. This means that it's not about where the association is registered, but where key decisions are actually made, such as board meetings or major business planning. So if the management of its affairs is exercised at any time during the calendar year in Malaysia, the trade association is considered a resident in Malaysia, even if it operates in other countries as well. Once this status is established, the association is presumed to remain resident unless there is a strong proof to show otherwise. For example, if the management decisions have clearly shifted overseas. So this classification is important because residency affects tax obligations. A resident trade association may be entitled to certain tax exemptions or tax treatments that non-residents aren't eligible for.
Now, we will look at how the Income Tax Act 1967 treats the sources of income for trade association. Under this act, a trade association can derive business income, for example, through subscription and entrance fees. These are usually exempt from tax because it is derived from members and it is not earned for seeking profits. However, when a trade association earns gross income through transaction with non-members, that income becomes taxable and treated separately. Any income derived from investment income such as interest and dividend under Section 4C and rented income under Section 4D are always subject to tax. The example sources of income for trade association which are taxable include seminar fees and income from trade association activities. Meanwhile, income from member subscription remains tax exempt. Therefore, trade association income is taxable or exempt based on its source and whether it is earned from members or non-members.
So I'll be explaining about the tax treatment of special donations and related concepts for trade associations, especially under Malaysian tax law. Special donations that are received for specific purposes such as renovations, equipment purchases, or building improvements are considered as capital receipts. These donations are not taxable provided they are used strictly for the association's approved objectives and the association is approved under Section 44(6) of the Income Tax Act 1967. And when the money is spent on those improvements, it becomes a capital disbursement. These disbursements are also not tax deductible because they are not part of the association's daily operating expenses. And in contrast, general donations or special subscriptions such as festive contributions from members for events like Hari Raya or Chinese New Year are treated as revenue receipts. This means that they are taxable. However, any expenses related to those events, such as food, venue rental, or decorations, are tax deductible as long as they are wholly and exclusively for the event. So while the donation is taxable, the related spending can reduce the taxable income. And in short, capital receipts and capital disbursements are excluded from tax, while revenue donations are taxable, but their related expenses are deductible. So, hence, proper record keeping and clear documentation are essential to ensure compliance with LHDN's requirement.
Next, the capital allowance. Capital allowance are tax deduction given for equipment, plant and machinery used in the business activities. These assets are essential for operation and can be claimed for tax reduction. Under ITA 1967, if the asset qualifies as a small value asset, the trade association can claim 100% write-off in the year it was purchased. But remember, the qualifying cost of each asset must be below Rm2,000 ringgit. The example of SVAs includes small office equipment like calculator, printers, or fans, as long as they are below the 2,000 ringgit threshold.
Let's look at this example. So this is a statement of profit or loss of a trade association. And as you can see, the income are derived from member subscription fee, seminar fee, and trade association activities. Next, the expense. We are going to take note of the common expenses that I have highlighted, which is employees' remuneration, transport, and stationery, which totals up to be Rm250,000. And from there, we will calculate the common expense attributable to each income using the formula A times B divided by C, which we have listened about earlier. So the total common expense, which is Rm250,000 times each income and divided by the total income. So for member subscription fee, we will get Rm125,000, and for seminar fees, we will get Rm50,000 and Rm75,000 for trade association activities. Next, we will compute the common capital allowances attributable to each income using the formula D times B divided by C. Thus, we will get Rm200,000 for member subscription fee, Rm80,000 for seminar fee, and Rm120,000 for trade association activities. Next, we will compute the tax payable for the trade association. For each income, we will deduct the common expense that we calculated before and the expense that are related to each income to get the adjusted income. And after getting the adjusted income, we will deduct it with the common capital allowances that we computed before. Then we will get statutory income from the three income. To compute the chargeable income, we will add all the statutory income that we compute, which is Rm80,000 for seminar fees and Rm315,000 for trade association activities. However, like we discussed earlier, statutory income from member subscription fee will be exempted from tax. So the total of chargeable income will be Rm395,000. And finally, we will compute the tax payable using the skilled rate, which will result in tax payable of Rm83,150 ringgit.
So now let's move on to illustration 2. So Clown-Best Food Trader Association was set up on 1st January 2019. Here you can see the income includes members' subscription fees, seminar fees, trade association activities, general contributions, and also dividend income. On the expenditure side, there are payments for directors' fees, employees' remuneration, consultants, seminar hall rental, and other related expenses. So the associations record a surplus of RM 1.9 million for the year ended 31st December 2019, which we will now use for tax computation. So now let's go through the tax computation. So in working one above, we calculate the common expenses, that is directors' fees, employee remuneration, transport, and also stationery, totaling to 200,000 ringgit. And now we allocate this based on income from subscription fees over total gross income, giving us 100,000 ringgit. And now next in working 2, we apply the same ratio to allocate this capital allowance of 500,000 ringgit, and this will result in 250,000 ringgit as common capital allowance. So now for the tax computation. We start with a surplus of 1.9 million ringgit Malaysia and deduct it with exempted subscription fees and adjust for common expenses and also non-business income. So after adjusting, the business income is 600,000 ringgit Malaysia, and now we will deduct it with capital allowance of 250,000 ringgit to get the statutory business income of 350,000 ringgit Malaysia. Since the dividend income is exempted, the chargeable income remains 350,000 ringgit, and the total tax payable is 71,900 ringgit Malaysia.
This is a tax exemption order for trade association issued in 2005. Under this order, income from member subscription fee is exempt from income tax. However, entrance fees are still taxable. Also, if the association has both exempt and taxable income, expenses and allowances must be split using a set formula. The formulas are simple. For expenses, use A times B over C, which is A is common revenue expenses, B is gross income from its member subscription fees, C is gross income from its business sources. For allowance, use D times B over C, which is D is common capital allowance. This ensures only the appropriate portion is deducted against
now for the tax rate.
Third association are taxed as a body of person. For the residents, they will be taxed like individual on a scale rates. Meanwhile, for the non-resident, we will pay at flat rate of 30%.
Oh.